California-based First Republic Bank becomes the third U.S. bank this week rescued from collapse. The infusion of $30 billion to save the troubled lender came from 11 of the nation's largest financial institutions.
Bank of America, Citi, JP Morgan, Wells Fargo, all contributing $5 billion of deposits each. Goldman and Morgan Stanley each depositing $2.5 billion. Then you have Bank of New York Mellon, PNC, State Street, and U.S. Bank each depositing $1 billion.
Is that a long-term solution? I don't think so. Are there other companies that have exposure to the bigger systemic problem? Very possibly.
Treasury Secretary Janet Yellen, who negotiated today's rescue with, among others, JP Morgan's Jamie Dimon, went to Capitol Hill today to quiet the concerns.
I can reassure the members of the committee that our banking system is sound.
Republicans also pressed the Treasury Secretary about whether other banks across America can expect similar rescues. She responded only if there is fear of significant economic and financial consequences.
Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about what's happening at First Republic Bank. Immediately following the collapse of Silicon Valley Bank, concerns started rising amongst customers and investors of First Republic Bank because the characteristics and the profile of First Republic Bank are very similar to Silicon Valley Bank. Over the course of the last 7 days, the share price has collapsed and the bank has frantically been trying to put facilities in place to shore up its balance sheet. Now, as you saw at the start of the video, 11 US banks have clubbed together and given the bank $30 billion in cash. And this is an unprecedented and highly unusual structure. The financial markets have not seen a rescue package like this before. However, the $30 billion only represents a small fraction of the amount of money that First Republic has raised over the course of the last week or so. So in today's video, I'll have a look at the profile of First Republic Bank and establish exactly why everybody's concerned about its current situation. We'll have a look at what's been happening with the share price, because the shares were actually suspended 17 times on Thursday the 16th of March before this new bailout facility was announced. We'll then look at the multiple bailout deals that First Republic has agreed over the course of the last week, which amount to $229 billion of finance. And then finally today I'll wrap up with my summary and talk about whether or not First Republic is now out of the woods, whether it's home and hosed, or if it's still facing the risk of a potential collapse. First Republic was founded in 1985 and at the end of 2022 had $212 billion in assets and $176 billion in deposits. About 70% of its deposits are uninsured, which is above the median of 55% for medium-sized banks, and the third highest in the group after Silicon Valley Bank and Signature Bank, which is one of the reasons that investors and customers were getting concerned. This chart plots the risk profile of a variety of US banks. On the left-hand side, we've got the percentage of deposits from retail customers, and higher percentages on this scale are seen as being a positive because it's less likely for millions of retail customers to remove all of their money overnight compared with large corporates who can simply do that with the stroke of a keyboard. And the bottom scale looks at a bank's loans and securities as a percentage of deposits. And for this metric, a lower percentage is seen as being lower risk. So overall, when looking at this chart, the lowest risk banks would be in the top left-hand corner and the highest risk banks will be in the bottom right-hand corner. And you can see the bank in the bottom right-hand corner here is Silicon Valley Bank. And alongside it, along the bottom axis, is Signature Bank. But if you look above Silicon Valley Bank, you can see that First Republic, which is marked as FRC on this chart, is also classified as being high risk because it has less than 40% of its deposits with retail depositors, and its loans and securities as a percentage of deposits is coming out above 110%.
The worry has been growing since Friday. In fact, there were multiple social media posts over the weekend showing people lining up at First Republic branches in Southern California to withdraw their money. First Republic also spent the weekend trying to reassure clients their money is safe, releasing a statement saying the additional borrowing capacity from the Federal Reserve, continued access to funding through the Federal Home Loan Bank, and ability to access additional financing through JP Morgan Chase & Company increases, diversifies, and further strengthens First Republic's existing liquidity profile.
But it's now been reported that on Sunday the 13th of March, which was the date that Signature Bank collapsed, First Republic secured additional financing through JP Morgan, giving it access to a total of $70 billion in funds through various sources. In addition to the $70 billion loan facilities from JP Morgan, First Republic has also borrowed $109 billion from the Fed between the 10th of March and March the 15th, and an additional $10 billion from the Federal Home Loan Bank on the 9th of March. And in addition to those $119 billion of loans, on Thursday the 16th of March, the bank received an injection of $30 billion from 11 US banks. The rescue deal, which was the brainchild of JP Morgan Chief Executive Jamie Dimon, saw JP Morgan, Bank of America, Citigroup and Wells Fargo all depositing $5 billion each with the bank. Goldman Sachs and Morgan Stanley deposited $2.5 billion each, and BNY Mellon, PNC Financial Services, State Street Corp, Trust Financial Corp and US Bank Corp all put $1 billion each into the transaction. All 11 banks have agreed to keep the funds at First Republic for an initial term of 120 days. The rescue deal was put in place after a highly volatile day that saw First Republic shares halted 17 times on the stock market. The initial response to the rescue deal from the market was positive, with shares rising 10%. However, concerns amongst investors are rising again after First Republic said in a filing that it was suspending its dividend, and it also said it had a cash position of around $34 billion, excluding the $30 billion in new deposits. The additional news that the banks have only committed to leave these deposits with First Republic for 120 days has also raised concerns that this is not a genuine rescue deal, because it's not equity that they put in, it's simply cash that they're leaving on deposit. This chart shows the movement in the share price of First Republic Bank over the last 5 years. And you can see that the high point for the shares came in July 2021, when the share price hit $219. And at that point in time, the market capitalisation of the business was more than $40 billion. And if we now change the graph to look at what's been happening to the share price over the last 3 months, you can see that on the 7th of March, which was the day before Silvergate Bank announced its problems, the share price was at $115. Which equated to a market capitalisation for the business of around $21 billion. If we now look at what's happened to the share price over the course of the last week, on the 9th of March, which was the day after Silvergate announced that it was going into liquidation, the share price dropped to $96. On the 10th of March, there was a further drop to $81. However, on Monday the 13th of March, which was the first day that the markets had opened since the announcement that Silicon Valley Bank and Signature Bank had both collapsed, the share price fell to $31. So this represents a fall of almost 75% against the share price prior to all of these banking problems. Now, over the course of the last 7 days, there has been an enormous amount of volatility in the share price, with the price falling to a low of $18 and reaching a high of $53. And the reason for that volatility is the ongoing concerns about the viability of this bank. As we discussed earlier in the video, First Republic has a low percentage of retail deposits, so therefore it has a lot of exposure to corporate clients. And the problem with corporate clients is that they can move all of their money out very quickly. Because of online banking facilities these days, if a corporate decides that it's no longer happy with your credit risk, it can request that all of its funds are transferred to another bank. So a bank run can happen very, very quickly. You don't need the old-fashioned system of people queuing around the block, waiting to ask the teller to hand over all of their cash in physical form. These days, it's all electronic and it can happen extremely quickly. And in addition to the low percentage of retail depositors, First Republic also has a high percentage of its assets tied up in loans and bonds. 110% of its deposits. And as we've discussed in other videos, the problem with the bond investments that banks have been making over the course of the last 3 years is that interest rates were at very low levels. As a result of the COVID pandemic, the Fed reduced interest rates to virtually zero. But over the last 12 months, we've seen a rapid increase in interest rates. And that's left all of those bonds that were issued over that period, which have low interest coupons, out of the money. So they're now trading below par. And if a bank is forced to cash in those bonds to realise cash, it means crystallising a loss, announcing that loss to the market, and that further fuels the nervousness from customers and investors. So as a result of those dynamics and the continued problems that are occurring in the banking sector on a daily basis, we recently saw Credit Suisse, the giant Swiss bank, having to seek a $54 billion bailout from the Swiss central bank. Because this crisis is unfolding on a daily basis and nobody really knows which bank is next, investors have become very cautious about the weaker banks, and unfortunately First Republic is top of the weak bank list in the USA. Now, this snapshot shows the share price at the close of play on Thursday the 16th of March, and you can see that the share price was $34. However, you can see that in after-hours trading, the shares have actually fallen below $34, and this was after the announcement of the $30 billion bailout. Investors obviously were not impressed with that bailout. The fact that it's only a deposit of cash and it's only committed for 120 days hasn't really put all of their fears to bed. Everybody is still concerned that First Republic does have liquidity problems, does have viability issues, and could potentially be the next bank to collapse. So what's the summary and conclusion today? Well, I wanted to post this video because the unfolding banking crisis that's happening all across the world is really a big story for the global economy. If you've been following the channel, you'll know that in the USA, we've seen the failure of 3 banks over the course of the last week. It all started on the 8th of March when Silvergate Bank, which was the specialist bank that had been providing facilities to the cryptocurrency corporates, announced that it was going into liquidation after a lot of the corporates that banked there started removing all of their cash. So there was a run on that bank. That run became contagious and moved across to Silicon Valley Bank, which was the bank that had specialised in providing banking facilities to venture capital businesses, predominantly in the tech sector. A lot of those venture capital companies had actually advised their clients to remove all of their cash because they became concerned that Silicon Valley Bank was going to be the new Silvergate. As a result of that, it became a self-fulfilling prophecy because as the money started leaving, Silicon Valley Bank had to start selling bonds to realise cash. Those bonds were out of the money, so they booked a loss of $1.8 billion on that sale, and that further fueled their liquidity problems. The shares of Silicon Valley Bank were suspended on Friday the 11th of March, and over the course of the weekend, the bank collapsed and a rescue scheme was put in place where all of the deposits were moved to a bridge bank. And on Sunday the 12th of March, Signature Bank, which was predominantly a traditional bank but did have a small exposure to the crypto markets, also collapsed. Now, as we've seen from today's video, the management of First Republic have been moving very quickly to try to put facilities in place to shore up the balance sheet. The first thing that they did was obtain a $70 billion loan facility from JP Morgan. They then secured a $109 billion facility from the Fed, a further $10 billion facility from the Federal Home Loan Bank, and the latest fundraise is this $30 billion deposit facility that's been provided by 11 US banks. So on the face of it, the management team of First Republic have actually done quite a good job. They've managed to pull together $229 billion in the space of a week. That's quite impressive. But what's less impressive is what's been happening with the share price and the market sentiment, and also the fact that the bank has announced that it only has $34 billion in cash available right now. When you take a step back and look at these figures, First Republic Bank should be swimming in cash at the moment. They've just raised $229 billion. And this is for a bank that has a market capitalization at the moment of around $6 billion. So this is a large fundraising. But the fact that they've only got $34 billion in cash compared with $175 billion of customer deposits as at the end of December tells you that there are still major problems going on at First Republic right now. As we discussed earlier in the video, the loans and securities outstanding equate to 110% of customer deposits. So the bank have been putting more than the cash that they had into all of these investments. And unfortunately for First Republic Bank, any bonds that you've been investing into over the course of the last few years are now seriously out of the money. They are underwater. And as First Republic Bank are not in the luxurious position of being able to sit back and wait for all of those bonds to mature and be paid back at face value, it's likely that they're going to have to sell those bonds in the market. That will incur losses and that will drive down their cash position even further. Now, I think one thing that's remarkable about the First Republic bailout is this $30 billion deposit facility that's been put together by the 11 banks. We've never seen anything like this before in the financial markets. It doesn't really constitute a bailout because it's a very loose commitment from all of these banks. They've handed over $30 billion and they've committed to leave it there for 120 days. But at the end of that 120 days, all of those banks could remove that money. Now, obviously, these deposits are unsecured. So those banks are showing their confidence in First Republic because they're putting their customers' money at risk. They've handed it over and they might not get it back. So they're trying to shore up everybody's confidence. They're trying to show that we're happy with the risk, so therefore you should be happy with the risk. But when you see what's happening to the share price, that confidence isn't really translating over to investors. The share price of First Republic has fallen in the aftermarket, and it's likely that over the course of the next week or so we'll see continued volatility as more concern starts to rise all around the world as to what's happening in the banking markets. We saw Credit Suisse earlier this week having to go to the Swiss authorities and get a $54 billion bailout, and it's likely that we will see more banks doing that over the course of the next month or so. And First Republic remains top of the list in terms of the risk profile in the USA. Investors are very nervous. They've pulled together $229 billion so far, but it doesn't look enough. It looks like they're going to need more of a bailout. And where that money's coming from, I don't know, because it looks like Janet Yellen and the Fed have asked these banks to step in and help out, but they can't help every single bank in America. So there is a real possibility that First Republic could find itself in a liquidity crisis at some point in the next week or two. And if it does, then it will be very interesting to see what the reaction from the Fed and the market is, whether or not there will be an actual bailout or if this bank could potentially collapse. So hopefully you've enjoyed today's video, which is a bit shorter than normal, but I wanted to get this information out into the market so everybody had a full update as to what's going on. If you've liked what I've said, then please give me a thumbs up. And thank you for watching this video all the way through to the end. And here's the usual payoff.